Aroma Accounting Scandal Case Study presented by KAC 2208A's Boys.
So, we go to our group member, consists of Muhammad Alif HAIQAL bin Muhammad RAMLI, Muhammad RIDHUAN bin ABDULLAH, Muhammad Hafizi bin Hashim, Muhammad FARIS WAJDI bin Muhammad SHAHARUDDin, and Muhammad FIRDAUS IMAN bin Muhammad ASRI.
Assalamualaikum warahmatullahi wabarakatuh. So today I will present about key issue in the case study of Aroma accounting scandal. For the key issue, there are one key issue that can be issued from our finding in Aroma accounting scandal cases, which is the accounting practice that has been adapted in Aroma PLC. All further details regarding the issue will be discussed deeply in the next part of the case study. So now I will pass to Muhammad Iman to proceed the presentation.
Next, key topic in the case study of Aroma accounting scandal. There are three topics that can relate based on the framework that have been prepared for the case study. Those key topics are financial reporting, cost and revenue, and ethics and professionalism. Financial reporting is the financial result of an organization that are released to its stockholders and the public. This reporting is a key function of the controller, who may be assisted by the investor relation officer if an organization is publicly held. Next, cost and revenue management. Costs are the special importance since manager can influence costs. Success at cost management has a phenomenal effect on the value because of the relationship between cost, business risk, financial risk, and valuation. Revenue management is the application of discipline analytics that predict consumer behavior at micro market level and optimize product availability, leveraging price elasticity to maximize revenue growth and profit. The primary aim of the revenue management is selling the right product to the right customer at the right time for the right price and with the right pack. Lastly, professional ethics are the principles that govern the behavior of the person or group in the business environment. Like value, professional ethics provide rules on how a person should act towards other people or institution in such an environment.
Thank you to Iman for a good explanation regarding key topics in the case study of Aroma accounting scandal. Now we proceed to the second part, which is case analysis in the case study of Aroma accounting scandal.
Based on the key issue that has been highlighted, which is the accounting practice that has been adapted by Aroma PLC, we managed to create a timeline on how the accounting practice adaptation has been selected as the key issue for these cases. So now I will deeply discussing about the first timeline, which is KPMG and audit committee non-parallel view regarding the commercial income. KPMG has questioning the audit committee regarding the recognitions of commercial income that has been adapted by Aroma PLC, since KPMG has facing difficulty in interpreting the uncertainty of how Aroma achieved the sales target and the timeliness of booking where the cash was received earlier before the sales was made. Okay, so the reaction regarding the question that has been highlighted by the KPMG has been answered by the audit committee, and the answer is the recognitions of commercial income are not giving any impacts to the auditor opinion in the auditor report, and they also stated that it's not a bit compulsory to make disclosure regarding the commercial income. Okay, that's for the first timeline, which is KPMG and audit committee non-parallel view regarding the commercial view. So I will continue about the second point, which is I will be discussing later.
Now I will be discussing about the second timeline of this case analysis, which is Aroma PLC recognitions of commercial income. Aroma PLC are recognized their commercial income from slotting fees, promotional costs, discount or rebates. All this kind of payment usually are made in a year advance, or in other words, mean by the cash will be received earlier than the actual sales was made. The recognitions of this commercial income are specified as a compliant is IAS 18, but the recognitions become unsatisfied when Aroma PLC take actions to record those accrual profit earlier, and at the same time delay the record of expenses in order to make their financial performance look healthier than they actually were. Booklet the promotion rebates on historical volumes and create thousands of lines of new rebates also are the triggers for booster of their commercial income. Okay, that's for all for second timeline. Now I will pass to Iman to describe our third timeline regarding about case analysis. Thank you.
Hi, my name is Muhammad FIRDAUS Iman bin Muhammad ASRI. The next case analysis regarding Aroma PLC case is adjusting the recognition of commercial income lead to overstated profit. This issue comes when the Aroma PLC has recorded the accrued profit earlier and booked the promotional rebate on historical volume, and this lead to 277 million of overstated profit that arise in the current period of accounting, and this overstated profit become the cause of accounting scandal that occur in Aroma PLC. The action of adjusting the item in financial performance can be classified as aggressive accounting, and this method was unprofessional since this practice are being to show a better financial performance and indirectly to reboot the trust of shareholders regarding the Aroma PLC share. This show that the action of the company was purposely for personal gain of management. Thank you.
So now I will continue the next part of case analysis, which is ethical issues that can be highlighted from the case analysis. So the ethical issues that arise in this case analysis are the unprofessional of the audit committee on execute their duty. As an audit committee, they should provide oversight of the financial reporting process, the audit process, the company system of internal controls, that compliance with the laws and regulations. But these cases, we can see that Aroma PLC Audit Committee are executing their duty unprofessionally when they stated their opinion regarding the commercial income. They should aware with the issue that has been highlighted by the auditor and take necessary action to overcome the issue that has been highlighted. This unprofessionalism also being an indicator to Aroma accounting scandal. So now I will pass to Muhammad Hafizi to continue the presentation.
Thank you, Ridhuan. Then we go to the last analysis regarding Aroma PLC, which is Tesco Stock Accounting Scandal 2014. Aroma PLC accounting scandal can be related to Tesco accounting scandal at United Kingdom in 2014. The cases are related due to the issue that trigger in both companies, which is overstated profit that occurs from accrual profit. Tesco had incorrectly booked supplier income by £250 million, although the error reportedly grew to £326 million. Both companies has used the aggressive accounting to improve their financial performance that clearly low at that time. In the end, Tesco has been fined by Financial Reporting Council due to the incorrectly booked supplier income by £250 million. Next, I will pass to the WAJDI for the next slide.
Recommendation that can be suggested regarding the Aroma PLC cases. Revise the accounting practice that has been adapted by Aroma PLC. Since Aroma PLC adapting aggressive accounting, which is a practice that adjusting or overstating the items that related to a company's financial performance. This practice was unprofessional practice that should not be adapted by a company, cause this accounting practice will lead to falsely enhanced view or for the personal gain of the management. This accounting practice also was not followed the core principle of IAS 18, and this accounting practice can be replaced with more proper approach with conservative accounting. Both adoption can be used as a guidance for a better accounting recording, and it also may lower down the risk of manipulating financial statement to occur. Revise the accounting practice from aggressive accounting to conservative accounting. As we know, Aroma PLC is recognized their accrual profit earlier than its recognition time. Aroma PLC also delay the record of expenses or accrual, and indirectly this lead to action of overstating the company profit. So, by using the conservative accounting, Aroma PLC are required to prepare company account with high caution and high degree of verification. For example, Aroma PLC must ensure that all probable losses are recorded when they are discovered. Meanwhile, the profit can only be registered when they are fully realized. Even though this method could not overcome their financial performance, but this method is the safest way and the professional practice that been adapted by majority of the company management.
Thank you, WAJDI. So, for the last recommendation that can be suggested on Aroma PLC is revise the accounting practice by referring International Accounting Standard 18. In IAS 18, a revenue can be recognized if it met the recognition criteria. The nature of the business of Aroma was retailing, so basically the revenue arises from sale of goods. One criteria in recognize this type revenue are the seller has transferred to the buyer the significant risk and reward of ownership. So, by reflecting back on how Aroma PLC recognize their revenue, we see that Aroma PLC recognize revenue 1 year earlier than the actual sale made. So, basically the recognition that made by Aroma PLC is could not be satisfied. So, to overcome the situation, a better understanding in accounting standard need to be practiced in order to create a better accounting recording, and at the same time, any unprofessional or illegal practice can be avoided from being occur.